Last week was a huge week in terms of callouts for Ascend trading. There were two callouts that I did last week that leveraged the exact same strategy and got us somewhere between 16 and 20 points on each play. So let's talk about them. The first play that I want to talk about was one that we took on July 20th. At market open, we had a couple ideas on where we thought the market could go. My bias was short overall. If you'll notice here, my setups for the day were a rejection at 64.47, as we had 10% odds and 50% odds on both our lower and midterm timeframes on our fractals charts. The second setup I was looking at, though, is a short continuation down with a breakdown below our vector clusters. Right now, at that time, our vector clusters were sitting between 64.35 and 64.37. So we really wanted to watch ES to see if we got some type of a revision after 10 a.m. data to see if we could sit below that 64.35 area for continuation short. I really like looking at vectors at market open when we are trading, because this shows where our general bias is for the day on if we are going to have long waves on our fractal charts or short waves. So if we're above our vector and above pivot, I could expect continuation to the top side. And if we're below vector and below pivot, we expect continuation down. So again, that idea was looking at a break below vector on various timeframes. So I want to show you guys on our 20-wave 15-minute on July 29th, you can notice here that we had a cluster of vectors at 64.37.50. We had a cluster of vectors at 64.36.25 on our 10-wave 15-minute. And then finally, we had a vector at 64.35.75 on our 7-wave 5-minute. All of these fractal timeframes are relatively low timeframes. The reason why I wanted to look at these lower timeframes is so we could catch a move before we actually ended up missing the full move to the downside. Looking back at our linear chart, you'll notice that we were actually pretty high and pretty strong all in our extended trading hour sessions. But as we got to market open, we were seeing some pretty strong downward facing volume. So I was looking at this area of 64.35 to 37 to see if we could get a break below this for continuation down. And you'll notice that right before open, we had a little bit of strength attempting to get above this 64.37 area. But as our regular trading hours opened and our New York session opened, we saw this pretty strong red candle to the downside. We ended up entering this trade at around 8:45 to 9 a.m. as we were seeing this continued weakness below that 64.35 area. And we're able to take this actually all the way down to 64.15. Why did we pick 64.15 as our closure area? If we go back to that short setup and look at our fractals charts, you'll notice that on our 7-wave 5-minute, this is a very, very low time frame. You can see that was 64.15 was past our 2% odds, which basically means there was a 2% chance of price continuing past 64.21.58 on this really low time frame. So that seemed like a little bit of a gamble. But if we looked again at our slightly larger time frames, so thinking about the 10-wave 15-minute, we saw 64.15 was our 10% odds of continuation all the way down here, which basically means we had a 10% chance looking at the 10-wave 15-minute for price continuing even further down. Our 20-wave 15-minute was showing 64.14.45 as a 10% odds as well. So essentially, looking at these lower and midterm timeframes, I wanted to make sure that I wasn't shooting for the moon for some of these short setups. This still ended up being about 16 points short, but I wanted to make sure I got a full closure because I had a 90% chance of price bouncing at around this 64.14 or 15 area. This is a really, really simple example of watching price action at New York session open, partnered with really tightly grouped vector clusters to understand if we have resistive areas for continuation down or strong bounce areas for continuation up. Let's talk about the second trade that we took this week that leveraged this exact same logic. The next trade I took that leveraged this vector cluster concept was on July 31st. You can see in chat, Bruce and I were talking in live voice about a vector cluster around 45 to 48 on our fractals on ES. I was also in confluence with some buyers' objectives on Milk's chart as well. So let's go look at 45 to 48 on our fractals timeframes. You'll notice that on our 20-way 15-minute, we had a vector at 64.48.25. And you'll notice on our 10-way 15-minute, we had our vector at 64.46.13. So let's go look at a linear chart to see where this makes sense, keeping in mind that 64.46 and 64.48 area. Again, at market open, we were looking at 46 to 48 to try to understand if we were going to either break below or hold below this zone for continuation to the downside. Right at market open, we did have some decent downward momentum, but actually our price ladder was showing a decent amount of buyers on the tape. So we wanted to be really patient on this first candle that opened. About 15 minutes in, we did have a retracement up to this 64.46 area. Never got a close above 64.48, but price did try to get above it. You can see we had some wicks here at 64.51 and even 64.50. So we were patient, waited for a close on the 15-minute candle below 64.46 and entered our shorts. Now, where did we end up trimming on this particular area? First and foremost, going back to our fractals charts, we wanted to understand where an informed trim was. Going back to our 20-way 15-minute, we saw that we had a 20% odds and a 10% odds of chance of continuation at 64.35 and 64.32. On our 10-way 15-minute, we had a 10% chance of continuation down at 64.33 and then really extended downside to 64.20. So my idea for my main trim was going to be around the 64.33 area because we had 10% odds of continuation on our 10 wave and our 10% odds of continuation on our 20-way 15-minute charts. You can see here that even though we did come all the way down to those areas, it ended up actually being a little bit of paper hand. All the way from 46, we traded down to 32. I was mostly out of my position at this point. Lo and behold, price ended up continuing to the downside very, very strongly. And while I did have a runner past 64.32, most of my position was out at about 15 points. Fractals can be a really, really strong tool to understand where you can have informed entries and informed take profits. This was kind of a funny example, though, where I was really, really proud of my analysis on taking my trim at 64.31, but I actually had massive potential to go almost a full 80 points down further. We ended up having some tariff news on this day, so news did bring price down for a little bit of what we would consider an outlier day. But I'm not looking for home runs on every single trade. I'm looking for following my strategy and having really, really informed entries and profit points. So these were two examples last week of leveraging vector clusters to understand if we were going to see strength or weakness in the market right at open, and leveraging percent odds areas on different timeframes in our fractals charts to inform where we should be trimming on these plays. If you guys have any questions about this strategy or how to use fractals in general, we would be very happy to talk about it in a one-on-one. We also do live trade and Ascend every single morning. This is two of many fantastic trades we had last week. I'd love for you guys to join us every morning for live trading. But until then, we'll chat next time.